Regardless of how long you've been trading, whether that be a day or a year or 5 years, I think we can all agree that the basics of trading are the foundation of any strategy or trading plan. So in this 5-part series, we're going to start at the very beginning of trading basics, and work our way up brick by brick all the way to the advanced topics over the course of these 5 videos. This is a 5-part series, so make sure you hit the subscribe button and the notification bell so that way you don't miss any of the series. We're starting at the very beginning with the basics, looking at TradingView. Understand how to use TradingView and all of its different functions, because all of those functions will usually transition to other platforms as well. All the different tools, the different indicator templates and templates in general, and the different layouts. Then we're going into candlestick charts and looking at the different nomenclature and the meanings of those nomenclatures, so that way you actually understand what candles mean when they're printing on the screen. And then looking at a flowchart of a trader's journey from beginner all the way through advanced and everything in between. Here are all of the topics that we'll be covering in this series, starting with beginner, intermediate level 2. Here's all the topics. Feel free to pause this as I go through so you can check out what's going to be in this, and then going into advanced topics, advanced level 2, and really hammering home the entries once all the information is on the table. Here we go, right back to the basics. Remembering when I was on day 1 and all of my expectations being taught to me by some type of mentor, my expectations were very high, and seemingly that I was going to start making money immediately. So I've got some lists of expectations over here, and I'm going to provide a lot of perspective about these expectations and the realities here in a minute. But looking over here, so trading is easy. I will immediately make money. And although trading is very simple, you're looking to buy and sell when price goes higher and buy when price goes lower, or cover. It can become very difficult because, and it is very difficult because there's so many different things to be looking for and all of this information on the internet, and it starts to get jumbled in your brain and you start to have emotions getting involved, and it becomes very difficult. Also, learning more will make you a better trader. Just because you have more information, you can know everything there is to know about the market and still not be a profitable trader, because you can't put it into a repeatable process based off behaviors that show up over and over again, and then you're letting emotions get in the way. So you could know everything. You could be the best technical analysis person out there and still not be a profitable trader. The holy grail indicator or strategy. There is no holy grail indicator or strategy. Most strategies work, but our emotions are what get in the way, as well as, all the different emotions like fear of missing out, greed, all those different things tend to get in the way, or just that trader not following the strategy to the letter. Indicators, there's lots of information on the internet about these great indicators that will immediately make you profitable if you just follow what the indicator says. It's all garbage. It's all nonsense. The best indicator that you could have on the chart are the candles and the levels, the high and low of the day, previous day, month, year, those types of things. I'll just learn how to trade one pair each day. Now that could be fine as long as you're looking for setups on that one pair. But the problem becomes whenever you're watching that one pair and you don't have a setup and you feel like you just want to take a trade, instead of having a basket of instruments and then only looking for the best setup out of your playbook within that basket of instruments, and then once that setup presents, only looking to trade that pair for the day. I personally do not only look at one pair. I have a basket of about 5 to 10, and then out of those 5 to 10, I will usually choose 3 or 4 for that day, and then once the setup starts to present based off of my signal, I will narrow in on that one pair. A better win rate equals a better strategy. There are people out there with a 20% win rate, but because their risk to reward is so great, they are making more money than people with a 90% win rate. And realistically, you could have a 90% win rate and still not be a profitable trader. Think about the math of this. If I have a 20% win rate, but my risk to reward is really, really good, I could still be making more than somebody with a 90% win rate, and they're only getting less than 1-to-1 or something like that along those lines. And I love giving people perspective, because trading is not a simple career path, and neither are things like becoming an engineer or a lawyer or a doctor or any of these high education career fields where you actually have to go to college. You have a very set curriculum of things to learn, and then as you're going through, you have practical application and things like that to practice. And even things like doctors, where they have residency afterwards, so they have time to practice before actually practicing medicine. They're there with a mentor directly assisting them and things like that. And in trading, it's not like that, because we have the ability, anybody on earth has the ability to just open a broker, put money in there and start executing trades. So a little bit of perspective on trading. Doctors, lawyers, and engineers take years of schooling just to enter the profession and still make mistakes along the way. Traders have little to no schooling and expect to walk into the trading scene and just instantly be successful. Study the markets like you are studying for the bar. Study yourself like you are studying for a finals test. Do not lose faith in yourself. Always keep pushing forward. Minor setbacks and things like that. Make small adjustments and continue pressing forward. Learning about the markets and how it moves, learning everything about your strategy, learning to execute without emotion takes a lot of time. Even then, you will still make mistakes and have bad days from time to time. I still have bad days from time to time, and that is perfectly fine. But if you start to recover from those quickly, and instead of worrying about those bad days, you can just move forward, you're going to be a lot better off. Some things about trading in general: strategy hopping. Strategy hopping will destroy your learning curve and significantly slow process, because think about it like this. If I was a teacher and then I decided that I wanted to go and be an engineer, there's a huge gap in the things that I need to accomplish and the information that I need to know between those two career fields. And it's like in trading, there's a bunch of different career fields just within trading itself. So if you master or get better at one strategy, but then you have a bad day or a bad week and you say, oh, this doesn't work, I'm going to go do this other strategy. Well, now you're basically the new guy on the block, and you now have to relearn everything from square one. And what tends to happen is people do that over and over, and they start blending a bunch of things together, and that is just a recipe for disaster. So how do you actually fix that? Take some time. Look around for a strategy that fits you. I'm not even saying that you have to trade this style of trading, at least with this beginner portions of the series, right? I'm obviously going to go into my style of trading, the way that I trade, later on in the series. But for these beginning portions, if you're somebody that wants to get into swing trading, that's great. Get into swing trading and figure out how to do that, but only stick to that style. If you want to be in this style of trading, looking for scalps, 3-day setups and things like that, then master that one thing, and then maybe you can expand upon what you already know, but you're not necessarily going to completely jump to a whole different strategy. Once you have found a style of trading that fits you or suits you, stick to that one strategy and learn everything that you can about it. Never learn another strategy or deviate from the path of least resistance, which is to simply master the setups associated with that style of trading. Let's talk a little bit about position sizing. Now, I pulled all of this directly off of my sourced, I've got them listed up here, Investopedia, Baby Pips, and I just used what they have to say about this stuff. But PIP, percentage in point, you're going to find this term in Forex and things. The smallest price change increment for Forex pairs to the right of the decimal, to the right of the decimal. Each PIP has a value associated. For example, if the Euro USD has a price of $1.10, and it moves to $1.10, 0.1051. Euro USD has moved 1 pip to the right of the decimal. That's the smallest amount that could change that went up by 1. That is 1 pip. Smallest change, tick, a tick. The smallest change possible to the right of the decimal. This is important, the right of the decimal. For example, if an instrument is $1 and goes to $1.01, the market has moved 1 tick. A point is the smallest possible change on the left side of the decimal. For example, if the price of an instrument is $1,000 and moves to $1,001, the market has moved 1 point. So important takeaways from this: when sizing positions, it is important to understand the value of 1 pip, tick, and point for the instrument that you are trading in order to size your position appropriately. Something that I suggest doing is just going on to, you can go on TradingView, and I'm going to show you how to do this later on, but use paper trading function and just put on some positions with one contract or one lot or whatever, and see what the difference is per pip. Or you can even go to your broker's website, and a lot of times they will have the values of that contract, the values of those lots, that lot size for each instrument that you're looking to trade. You can put those values on a sticky note and just have them by your computer. So that way you can size your positions appropriately and not over leverage or oversize a position, taking a larger loss than you intended. We're going to go into TradingView now, and we're going to learn all of the different functions of TradingView. I'm going to show you some cool little things that even if you've been around for a while, you may or may not know. And these are the list of topics that we'll be going through: how to do chart settings, layouts, indicators, templates, watch list, time frames, tools and toolbar, keyboard shortcuts, and of course the autofill chart function. Got a nice little chart over here. But going through these things will really remove a lot of stress from your trading once you fully understand your platform, and you should definitely fully understand your platform before you're even thinking about executing a trade. Let me hear down in the comments below, as we're going through this and we get towards the end, if I've missed a topic, let me know and I will get it into the next video. If you have questions, let me see them down in the comments below. I'll make sure to include those in the next video. All right, when you pull up TradingView, this is about what you're going to be looking at. You've got your candlesticks all up here in the middle, and then you're gonna have this grid background, and you know your instrument name up here in the left corner, the broker that instrument is associated with. Up here, you might not have this just yet, but I'm gonna show you how to do these things now. So let's start up with the chart layout first. All right, you can right-click up on the screen and click Settings. That's gonna pull up your chart settings like this. Now, me personally, I like to use the white and black candlesticks. That's personal preference. However, I do enjoy looking at these because it's just simple to look at. It stands out on the screen, especially with this white background. Obviously, if you want to trade with a dark background, you're going to have to do things a little bit different. So that's how you change your candlestick color. All right, now you're going to come down to status line here. You're going to see all of these different things listed up here. Now I like to remove a lot of this information up here, so we can get rid of like the logo and leave that there. Open, high, low, close values. Get rid of all of this stuff up here. I don't need to see all of that sitting up there floating on my screen, and that'll pretty much do it. I like to have at least the name and the time frame that I'm currently on up there in the left hand corner. Let's go down to scales and lines. Take a look here. Nothing much to really change here. We go down to canvas. All right, I like to have the solid background. Of course, that's still a personal preference. All of this grid in the background, I don't need it. I don't use it. I don't need my eyes to be staring at it and focusing on it, even if it is subconscious, so I just like to remove it. All of these text on the sides and at the bottom, I prefer to have a slightly smaller text, so I will just change that myself. Of course, you don't have to do that. Coming down to trading, if you're trading directly on TradingView, you have the ability to, depending on your broker and things, put your buy and sell buttons up here in the left-hand corner. That is a good function to have, especially for me, because I like to use market entries. Coming down a little bit more, you can adjust your settings and things like that. You can put your executions up on the screen. It'll put like little check marks and things like that. Having your order brackets, this is all the settings for that. And then coming down to events, you're going to see economic events. That's going to put your economic events down here at the bottom. You can work with that if you want those down there. I prefer to have them there so I remember that those events are about to take place or coming up. And then the big one that I want to point out to you is the session breaks button. This is going to put the beginning and endings of the days up on the screen with this vertical line here. You can change the color to whatever you would like. And those are my settings. Now we can work on the different types of time frames. So depending on what kind of trading that you're doing, if you're doing some scalping and day trading, of course, the lower time frames are a bit more important to you. However, having all of these up here in a favorited fashion is very easy. Just click on time interval, and then whichever time frames you would like, you can just put a little star next to it, and it will add it to your toolbar up here at the top. Working our way to the right, you're going to notice the different types of candlestick or different types of chart layouts that you can use. You can have your line chart, your Heikin-Ashi, and your bar charts and things like that. Oh, there we go. Bar charts, Heikin-Ashi, whatever. Same thing. You're going to click on the little arrow, and then you can just put the little star. Now, me personally, I only use the candlestick chart. That's, again, personal preference, and the rest of this video is going to be in reference to candlestick charts. Then we have the indicators section, and over here you can click on indicators. You'll be able to type all of these in. These are the ones that I personally have favorited right now to do things like put up my weekly separator, so that way it automatically separates it for me. So I understand where the beginning of the week is. Pips to profit indicator, that is going to be an all-encompassing sort of indicator that gives me previous days high and low, the days of the week, EMA, all those different things, which can be found on my Discord server, which is free to join. It's free to hang out there and go in and talk with everyone. You could talk to me, send me a message, whatever you'd like to do. The link to that Discord server is down in the description below. And then looking at these indicators, if you want to find a new one, so if you just want to find an EMA or something like that, you just type it in and you'll be able to click on it right here. If you want to favorite these, all you have to do is hit the little star, and again, it will add it into your favorited section right here. Now, once you have a group of indicators on your chart and you would like to have those as a template, what you can do is you go up here and you click this little four square button up here, and you can click indicator or save indicator template, and you would just type in whatever you would like. And what it's going to do is put up here the little dots, and you can change your indicator template however you would like to do, just like this. Okay, now it's going to try really hard to load. You put these up here, it'll do it for you automatically. You see I've got the weekly separator, previous days high and low, previous weeks, all those different things. You can get rid of this. All right, and if you want to do some back testing or anything like that, where you want to get some good practice in, you can use the little bar replay button. Go back and go down to a lower time frame, do whatever. Let's say that you thought this was going to be a good place to buy, so you can come down here and click the little buy button and then play through the chart and see if that trade was going to play out or not. All right, looks like I'm going to lose this one. No big deal. You flatten it, and you can continue to do your back testing and things like that, if that is how you want to go forward doing this. Now, up in the right-hand corner, you're going to see a couple different little icons up here. You're going to have this one right here. So this is going to be the one that allows you to put 2 or more charts up on your screen, and whatever layout you would like to do. We've got side by side, over, under. You've got the different kinds of 3 layout. We can do one of these like this. And then also looking at this, you're going to notice down at the bottom, symbol, interval, crosshair, time. This is going to sync everything together. So if I were to click this, it's going to make sure that all of these charts are on the same symbol. If I did interval, it's going to put them all at the same interval, the same time frame. So depending on what kind of layout you want, that option is there for you. Also, up here in the right-hand corner, you can click this and change the different types of layout that you have saved. To save a layout, all you have to do is, where's the save button? To save this kind of layout, all you have to do is come up here and click the little save button and name your layout, and this is what it will look like. You can rename it. Also up here in the right-hand corner, you're gonna find your chart settings, unless you just wanna right-click and find them like that, as well as the ability to go into full screen, as well as if you want to take pictures of your chart to put in your binder or something like that, your journal, you have those options up here as well. When you go to create a watch list, you have a few different icons over here on the right. All you're gonna do is click on this button right here, and you can start adding symbols into that section. Right, you can add all the symbols you want. And then another thing that you can do is if you want to separate the different kinds, let's say I want to do metals here or energy or whatever, you could put different icons here. You could even do, let's say you have different kinds of setups that are setting up on that day and you want to categorize them. You could do something like this where you do like first green day. Oh, didn't spell that right, but you get the gist. First green day, and then you can put all the pairs on your watch list that are setting up for that type of trade in that category. Very useful. Also, another thing that you can do is you can favorite or make different templates of your watch list. So all you have to do is click on the watch list little button up here, and then you'll get this screen, and all you have to do is click the star button, and that will give you the ability to have these little bubbles, and you can switch back and forth between your different watch lists. Working our way around, down here at the bottom, one of the things that will happen is, especially with certain indicators, you'll find your charts getting scrunched all the way up. You'll pull up an indicator, and it's going to look like this, which can be very frustrating. So down here in the right corner, you'll see this little A button. Just click that, and it's going to automatically keep the candles nice and neat for you on the screen. I like to keep that checked at all times, if at all possible. Now to get your different types of tools. Notice I have this big toolbar up here that just floats around and goes wherever I would like it to. You can click over here on your little icon, and then down here you're going to find a drawing panel. Click that button, and you'll get this new little toolbar over on the left-hand side. Now, whichever tools that you would like to use, such as the trend line, ray, whatever it is, you can click that little star button on the side, and it will put those up here for you. Things like positions, going long, going short, things like these little pathways, just all the different types of charting tools that you could use are in that, and then you just favorite them and get them set up here on your toolbar. And then you can take this toolbar and move it wherever you would like. Earlier we said something about practicing trading, having a place to go in order to execute trades risk-free without real money. And this is one way that you can do that. Or even if you would just like to practice with your position sizes to see how much those contracts are worth or whatever it may be. You can go down here, you click on paper trading, hit connect, and that's going to pull up something like this. Now, once you have this signed into, you're now free to start executing trades. So you're going to go down here, click settings, go turn on your buy and sell buttons, and have your instant orders placement on. And then up here in the top left corner, you're going to be able to change your quantity up and down. If you accidentally click something like this, you can clear it out and get back to a normal amount that you would like to actually trade with. Now, there's a few different ways that you can place trades on TradingView. There's going to be the right-click method where you hit trade. You can hit buy, sell, create a new order. There's the instant orders over here where you can use the sell buttons and the buy buttons. Let's hit sell real quick. It's going to execute that, and it's going to show you over here on the right with this one full contract that I've just entered, how much money I am currently up or down. Something that you can do is go into trading and change this now from money to ticks. Oh, I've clicked on the wrong one. Money to ticks, and that will change your position to look at ticks, percentage, and then your brackets. Depending on your broker, you're going to take this. Some brokers don't allow you to do this. Some of them do, and this is for the stop loss and take profit. Same thing, you go down here, you can click on the brackets, and you can change those to ticks, percents as well, or you can just leave it at money. And one last cool thing that you can do is go up here, click your little icon in the top left-hand corner again, come down here and click keyboard shortcuts. Once you're in here, you're going to go through and look at all the different kinds of shortcuts, things like using trend lines, all different kinds of stuff. You can click in here for the chart. What in the world has just happened? Go back up here. We're going to go back to keyboard shortcuts, and then you can go through all the different kinds of shortcuts that exist. All right. Now that we've gone through the basics of TradingView and a little bit about psychology and the expectations of a trader, let's get into the actual chart itself. We can start talking about the nomenclature of a candlestick, the pieces of a candle. So up here, I've got an example of a bull candle, or also known as a up close candle. Over here on the right, I have a bear bar, also known as a down close candle or down close bar. And within this, we have the body of the candle, which is the large portion, or in some cases, it'll be a smaller portion. We have the high of that bar and the low of that bar. Now, for a bull bar, the open of that bar and the close of that bar. For a bear bar, that would be the open of the bar right here and the close of the bar down over here. Now, why does this matter? What advanced or more advanced topic does this cover? Other traders are buying and selling at the close and open of new bars, which will later help you to understand engulfments and where traders are trapped. So keep in mind, for this bull bar, for certain types of bars and things like that, somebody has just bought this bar, and if we're looking for traps and reversals and things like that, or even trend trades, we want to understand that, which will come later on in this series. Some might argue that this is a more advanced topic, but I like to just put it out there for everybody right from the beginning, because this understanding is extremely important. Maybe not how to use it, because I think that is definitely a more advanced topic. However, the understanding that the markets are fractal. Everything happening on a higher time frame is happening far more frequently the lower the time frame that you go. For example, a market is making higher highs and higher lows on a monthly chart, but on a lower time frame, there's going to be a series of trends and swings within that uptrend. Yes, the monthly chart is going higher. Yes, they are trending higher, sure, but that doesn't mean that down on lower time frames there is not still opportunities in the other direction. So let's read off of this. Important understanding: everything happening on a monthly chart is occurring far more frequently on lower time frames. Everything meaning creating swing highs and lows, chart patterns, candlestick patterns, breakouts, failed breakouts, etc. All of those things do happen on a monthly chart. They just take a lot longer to form, a lot longer to build, and a lot longer to play out compared to a 1-minute chart, a 5-minute chart, or a 15-minute chart, where we are still getting chart patterns, we're still getting breakouts, we're still getting failed breakouts, but they're happening a lot more frequently, and the patterns are building a lot more frequently down on those lower time frames. So what advanced topic could we associate this for you to put in your notes so that you can come back to this later and hopefully have some sort of aha moment? Just because the monthly chart is trending to the upside, or even the weekly and daily chart, does not mean that there are not large intraday swings counter to the direction of the overall market. Am I saying that you should be counter trending the market frequently and just blindly? Absolutely not. It's based off of setups, and it is based off of templates that we will talk about later on. A market may be expanding a range on a higher time frame, which leads to a larger trend influencing the type of week and template and 3-day cycle that is developing. Large moves come with high reward and lower risk when there is a larger time frame setup being executed on a smaller time frame being driven by the large money traders. Saying this, I'm not trading the 1-minute chart when I enter in on the 1-minute chart. Yes, I am using that chart as an entry time frame, but I am taking that trade because all of the big money is driving that market, and it should be expanding or reversing very strongly based off of those factors. I am just getting in with as little risk as possible by using a smaller time frame to do so. Expanding upon the fractal markets to try and give you a better visual. If I showed you this chart and I said, hey, what time frame is this? You would not be able to answer me. So looking at this, we've got a nice little chart pattern down here. We've got a breakout pullback. We're making higher highs and higher lows, more chart patterns and expanding to the upside, more consolidation. So to understand what I'm saying, regardless of time frame, there are breakouts, failed breakouts, expansions of ranges, chart patterns, all of that. Market structure, it doesn't matter what time frame that you are on, all of that is going to come later on. Let's continue on. So this is a 15-minute chart of the NASDAQ to answer that question. Coming to this chart, again, you wouldn't be able to tell me what chart this is or what time frame. We have very similar structure to what we just looked at on the NASDAQ. A breakout, chart patterns, consolidation, higher highs, higher lows, an expansion to the upside, and a reversal. This is a weekly chart. A weekly chart. Each one of these bars, each bar is 1 week. Now we have a 1-minute chart of the NASDAQ. Again, very similar structure, consolidation and a breakout, chart patterns, expansion, consolidation, continuation, consolidation, and a reversal. Now I am not going to read all this or else we'd be here for 35 minutes and I would watch my view time absolutely tank because no one wants to watch me sit here and read through this. So pause this video, read through all this. This is the different types of struggles that a lot of people have with psychology in themselves, some definitions of what each one of these things are, and some fixes that you can apply as you're going through your trading journey to try and cancel out these or reduce them or hopefully just minimize them as much as possible. And last, but certainly not least, this is a really great tool that you can look at. It's a nice little flow chart starting from top left, ending in bottom right. A way to really systematically approach your trading journey. And this is very close to exactly what I did in the beginning, and now we're down here towards step 6. Step 1, education. Learn about the market. Learn about all the ins and outs of how to take a trade. Learn about your platform. Learn about the different trading platforms and charting tools. Learn all of the basics of trading. Find a strategy. So some of those things that we talked about earlier in this video. Next, you want to practice. Begin practicing your strategy on demo. Practice executing, practice learning how, or practice the platform that you're going to be using on demo. Journal. Treat those demo accounts as if it was real money. Don't just go in there and start taking crazy trades all over the place. Execute the strategy that you have looked into and begin starting to build your foundation for your ability to trade. Build your trading plan. Build your own playbook in step 2. So you want to have a trading plan right off the bat. After you already have a strategy and you've been doing a little bit of studying, you've been looking around for what to look for, start building your playbook. You can make adjustments later as you need to, but you should have a trading plan and a playbook from the beginning, and then you can make those adjustments as you need to. Step 3, adjustments. Consistency takes time. Make small adjustments where needed. That's where your journaling is going to come in. You're journaling every single day, your daily review, your weekly review, your monthly review. Go back and find the cracks in your armor and make those small adjustments. Sometimes they might need to be a little bit larger of an adjustment. Develop objective trading rules that you will actually follow. If you have 45 different rules, it's going to be tough. Kind of like going on a diet that's just completely absurd. You're never going to follow it. So give yourself 5 or 6 rules that are easy to follow, that have meaning. The rules shouldn't just be there for no reason. Like, all of my rules are there to protect me, and then follow them. All right. Continue to practice and gather data, both about your trading performance and your own psychology. Keep studying yourself, keep studying the market, keep studying your playbook, and make those adjustments. Step 4, consistency. Now, after steps 1 through 3, you should already be doing better than when you were back here on step 1. You've started to practice, you have the ins and outs, you have your strategy, you have your playbook. Now it's time to really put it to the test. Let's see if I'm ready, or if you're ready, to start trading with live money. This is where the really set in stone hard practice comes in. Make a challenge for yourself. Trade on demo consistently for 2 to 3 months. Set drawdown limits for yourself, and if you hit them, if you hit your drawdown limit, kind of like you're trading on a prop firm, You have to start back on day one. I'm 1 month in, 1 month and 25 days into my 2-month challenge, and I hit my drawdown limit. I am going back to day one and I'm starting over. I'm not ready yet. If you fail, restart the challenge on day one and attempt to get to the 2 to 3 month mark consistently. Repeat this process until you reach your goal, until you get to 2 to 3 months of profitability on that demo account. It is best to repeat the challenge at least twice. So if you want to do this once, 2 to 3 months, you've accomplished it, 2 thumbs up, pat yourself on the back, do it again. If you can do it again, you're probably ready for the next step, which is going to be application. Begin live trading on minimum size, the smallest size possible that you possibly trade small. This is where I went wrong. I did all of these, step 1 through 4, and then immediately I went into step 5 and I started trying to scale in size. Start as small as you possibly can, so that way you can make sure that everything is set in stone and you know what you're looking for. Your psychology is rock hard. Confirm that you are still capable of being consistent with live funds with small amounts. The trade setups are still there. The execution is going to be the same. You're just going to be making less. Because once you get some consistency, and you've confirmed that you feel no different now about trading with live funds than you do with your demo account, because you should have been trading your demo account like a business to begin with. Now, over time, and as your results dictate, you can start to scale up in size because the setups don't change, the market doesn't change, it just keeps repeating and doing the same things over and over again. And when your setups present over time, you can start to scale them up slightly over time. Slowly, and only as your performance dictates, begin to scale your trade up in size according to your trading plan. This is not an overnight or a 1-week process. Scale over time, meaning over the course of months of performance data. Begin to reap the benefits, having gone through the process the correct way instead of skipping a bunch of steps. So let's say that I'm trading 1 micro lot on Euro USD. Okay, I'm over here on the application process. I've been trading 1 micro lot, and I've been doing really good. I've got months of data. That setup has worked for me over and over and over again. It's got a really good risk to reward and win rate. And I've said, hey, now it's time to go up to maybe 2 micro lots. And I'll do that for a little bit. And then as performance continues to dictate, I'm going to do now 3 micro lots and so forth. I hope you all have got some value from this video. If you have, like button down below, please. It does help this video quite significantly. And over the next 4 weeks, going over the rest of the basics, intermediate, and advanced. I hope you all have a great weekend. I'll see you in the next one.